Odds makers think Conor McGregor doesn't stand a chance against Floyd Mayweather. But he does stand to earn at least $75 million, way more than he has ever earned in the past. So maybe, no matter what happens in the ring, McGregor won't feel like a loser. Similarly, who would win a trade war between the U.S. and China depends on how you're measuring. Economically versus politically, short-term versus long. In this week's blog, we break down the main issues. Let's start with the obvious. Many people think the sole benefit of trade is exports. If exports are high, you're creating jobs. If not, you aren't. Since China's exports to the U.S. are 4 times the U.S.'s exports to China, no doubt the U.S. has more export leverage. Based on exports alone, the U.S. would win, no doubt. But that's a narrow view. Prices in the U.S. would rise. China would retaliate. Sectors like agriculture would be hard hit. Major companies would likely see falling profits. If you think exports impact jobs, but prices and profits don't, brace yourself for disappointment. I would put it this way. If China suffers significant economic pain, so will the U.S. Politically, President Trump and many others in the U.S. seem determined to take a hard line on trade. But if economic pain begins to spread, will they hold the line, or will the pressure to compromise be too great? On the Chinese side, criticizing the president isn't even allowed. So in terms of political strength, you'd have to give the advantage to China. But we think the following 2 factors are actually the most important. First, although Mr. Xi, president of China, doesn't have to worry about dissent, he is worried about capital flight. Chinese people and businesses and foreigners taking their money out of China. That's been a big problem in the last few years. If a trade war decreases confidence in China's ability to navigate the next stage of development and capital outflows accelerate again, the pressure on the Chinese government could be severe. And lastly is the fact that the U.S. is a developed country. China is not. The U.S. is more than 4 times as prosperous than China. It has stable, well-developed capital markets and economic institutions overall, which means the U.S. can take a punch better than China. So overall, we give the edge to the U.S., but by a slim margin. Hopefully, we won't have to find out who can win a trade war because there won't be one. In contrast to the fiery campaign rhetoric, the Trump administration has actually taken a much more even-keel, reasonable approach to trade with China, targeting high-impact areas like intellectual property and not taking a broad shotgun measures like a 45% tariff. Taking a targeted approach doesn't mean you can't take a firm approach. You can. But it does minimize the chances of a broad trade war, and that's good. For more detail on our perspective, please read our blog online. This is Dan Joseph for the China Learning Curve. Thanks for watching.